or steps to get started in real estate investment. I recently was referred a client who is an executive at a large company, and they had been advised to purchase some real estate investments by their financial planner in order to add some diversification as well as some tax benefits to their investment portfolio. However, it can be daunting for someone who's not involved in real estate on a regular basis to understand how to get started in real estate and what they should purchase. So here's 4 basic steps to understand what that process should be. Number 1, first rely on a good team. Now, regardless of how familiar or not you are with real estate investments, it's essential to have a very good team around you of qualified professionals to help advise you and keep you out of trouble and make sure you're aware of things that could derail your real estate investment. So these team members need to be an excellent CPA, a great lawyer, a property manager, unless of course you plan to manage the property yourself, and an excellent broker who can all together advise you on what that strategy should look like going forward and help to make sure that you get the most out of your real estate investment. Once you have a great team around you, the second thing you should do is define the objective. And what we mean by this is, take a step back and think about why you're investing in real estate. So in the case of the client who I mentioned previous, their main motivation was to diversify beyond just stocks and bonds and typical investment offerings, but also to receive some tax benefits, especially for people who are in the high income earning brackets. To be able to receive some tax sheltered income is really a huge win, and grow their wealth over the long term in that way. So defining your objective should be the first criteria. And for some people, it might be that they received a pile of cash, and really their most important objective is the cash flow that they will then use to live off of. So make sure that you start out with the end in mind. And then the third thing that you should do is to really evaluate what your comfort level is. And for some people, that might mean that they're really not comfortable investing in certain markets or certain regions, or they find that it's really important to them that they be able to sleep at night and not have to worry about tenants who are going to set their place on fire, or have a toilet that overflows all over the place. And so if that's a key criteria and concern for you, you might want to consider investing in more passive commercial properties rather than apartments, so that you're not worrying so much about those levels of risk. Now, also the location is really important as well, because for some people, it's essential that they have an investment that's close by to them so they could drive by, keep their eyes on it on a regular basis, while other people really wouldn't mind owning something on the other side of the US as long as it's accomplishing their investment goals. So make sure you understand what your comfort level would be for that investment before you begin to take action. So once you have the criteria laid out with what you're going to be comfortable purchasing, then you need to think about the logistics, which is actually where a lot of people start instead of ending up here after laying things out. So the logistics would be, am I going to pay cash or am I going to get a loan? If you're going to get a loan, talking to lenders, understanding who's going to provide you that loan, what it's going to look like, and the terms and so forth. And then understanding if you're going to purchase a property that needs management, who your management team's going to be, because your management team is going to be absolutely essential in making sure that that is a good long-term investment for you. And then also understanding where this investment is going to be. Once you have those other pieces in place, that will allow you to go out into the market and understand what you need to purchase and what that investment property is actually going to look like. So for example, in the case of the client that we referenced before, we really began to understand that, the comfort level is something that's probably pretty easy to get out of, which might be single family homes. There's always a market for single family homes. People always need a place to live, and they were very comfortable purchasing several homes as investments because they knew they'll be easy to rent and easy to sell if and when they decide to sell in the future. And then making sure that they could drive by those locations was also a comfort level that was important to them as well. So we established a portfolio of single family homes as an investment for them that they felt very comfortable with and could easily get their hands around. So that built a lot of confidence in order to allow them to go into real estate investing when they had not done that before, because we established what they felt would be their comfort level, what they could manage currently at this time in their life, and be able to keep close tabs on. So those are 4 key criteria to getting started in investing in real estate. And if this brought you some value, please reach out to us. We'd always be happy to help.